All right, let's get this started. So a lot of you probably remember when I did the introduction to chart patterns. So today I'm actually taking all of those same charts that I used to show everyone the different chart patterns, and we're going to go through them. I'll explain the pattern very quickly, and then I'll show you where I would put stops and targets and look at it that way. So we're just going to go down the line, and I will show you the various patterns. And like I said, I'll go into annotation mode and we'll start looking at support resistance and how we might trade or not trade a particular pattern. So we're going to start here with the ascending triangle. Here we go. Let me make this big. Okay. So this, the ascending triangle, you're going to see overhead resistance and then a rising bottoms trend line on the bottom. Ascending triangles are bullish. The expectation is a breakout to the upside because you're seeing the, you're getting higher lows each time. So you can see the market and psychology, they're really getting, it's squeezing and they're ready to pop. So you see the pattern. Let's go ahead and go into annotation mode. Alrighty. And I'm going to actually trash all of these annotations so we can pretty much look at it fresh. All right. So remember, this is where we saw the pattern. Okay, there's the ascending triangle pattern. I'll go ahead and just quickly mark that, but we're going to use the skinny line. All right. This is just blurring up for me, so I'm going to do this. If it's blurry for me, I suspect it might be for you. There we go. Okay, so let's get that going, and then we have that rising bottoms trend line. Okay, so the expectation with these patterns is that you're going to get a rise about the size of the largest difference here at the end of the pattern. So that's how you would get your upside target. So this is what I would do, because the upside target, that's going to be my target. So I'm using this tool, and don't pay attention to the percentages. I really don't want to get into that, and I'm just going to show you visually how this works. So that's about the height of that pattern. So now I'm going to take it and just copy it over here. So this gives us what our upside target is. So let's go ahead and mark that with auto support resistance. All right, so obviously we don't know what's happening over here when we get to this pattern. So you want to watch it. You have it on a watch list, I would hope at this point. One of the things, of course, watching this pattern, I would be a bit concerned because you've got a declining PMO and the tops here are mostly moving across. So that's something to keep in mind. But if you're going straight off the pattern, you can see back here, in fact, I will give you a vertical. Right about here, you can see this is about the time that the PMO started to turn up. So we were already seeing some deceleration back here. If you can see that, there's just a little bit of a curve. That would have been also a sign that, okay, well, maybe we're getting this turnaround. We got the same thing here, and it turned out to be resistance, and it fell back down. But the idea, of course, is this is now my upside target, and I'm waiting for the breakout. Now, at this point, you're watching it and you get the breakout, meaning the pattern's now confirmed. So in this case, that was a gap up. You're kind of sitting out there a little bit in the, you didn't get quite the start you maybe would have wanted there, but that's okay. But your upside target at this point is up there. You can see that at the 162.50 level. And here's, let's say you got in, somewhere in the middle here. So you've clearly got a target right up this length. And then I would set my stop probably just below this, probably make it at the top of this gap support in this case. So right now, just visually looking at it, you can see that clearly you have more upside potential than you have as far as risk. So as this plays out, you're not going to hit your stop. You're going to move sideways. And actually, you could probably see a little symmetrical triangle there, and those are continuation patterns. So you get the breakout, you hit your target. And what do we do when we hit our target? That's when you reevaluate. So let's see what's going on there with a vertical line. Okay, we hit our target back here. What's happening with the PMO? It's still rising. It's actually putting distance between itself and its signal line. So things are looking good still. So at this point, I would raise my target. I don't have anything back here to compare it to make my next target, but I'm not going to worry about that. I'm going to stay with the trade. And I would adjust my stop. Again, I like to adjust stops, not actually where folks normally would do it, because everybody's stop will trigger at that point. And you could get stopped out too early. You could get hung up in that big decline if you have a price shock like this. Those are things to consider. Now, because there's really not a way to set this target, I would go back to a weekly chart to see where my next target should be. But I can tell you, you would have taken that rise, and sadly, price shocks happen, and we would have fallen here, but that would have triggered our stop, and we would have still ended up with a pretty decent trade here. Now, the thing is with chart patterns, as you're going to see as we go through here, is they don't always work. They're not always very dependable. But one of the dependable formations is the bull flag. I find that flag formations are really helpful. They tend to fulfill, or at least start getting there. May not get to that target, but generally you're going to get some runoff with a bull flag, and you're generally going to see some drawdown on those reverse flags. So let's go ahead and we're going to go into annotation mode again. And I'm going to clear all of these. That's our flag, so we're going to remember that. Actually, I could probably just select. So you can see that I have put in the minimum upside target. Like I said, if you go back and watch the introduction to chart patterns, and I know that's on YouTube under our stockcharts.com channel, you can find out more about how we measure and all of that. I want to just go through so we can look at where you would set a stop and where you might not, might not want to, and where you might want to set your targets. All right, so there's our flag. We know that our upside target was up here, so I'm going to draw that in for us. And again, this is based on the chart pattern itself. That's what your target will come out to. So we've got our upside target. I would also be watching this level as well. So this is our minimum upside target for the flag. But like I said, they're not always dependable. In fact, you can look back here and look at that beautiful flag that formed, and then it failed. And it failed miserably. So it's not a guarantee, clearly. But in this case, I would have been watching this flag. And look at the difference between the formation of this flag and the formation of that flag. What was going on with the PMO? In the formation of this flag, the PMO is rising. What was happening during the formation of this particular flag? The PMO topped and started moving down. So that would tell you, maybe you don't want to jump into that particular chart pattern, but that's why I use the PMO to do my sorting and then go from there and look for those chart patterns. So we know that's going to be our minimum upside target, but I would be thinking about the previous overhead resistance that we're seeing at that top back there earlier in March. Let's see, yes, March timeframe. So that would be one that I would be watching. I would probably, in all honesty, I would set my reevaluation target to here, because of the fact that that's where your overhead resistance is. So we get the breakout. We're very excited. We jump on in here, right? And we begin to ride this out. We start hitting that overhead resistance. So what is the best thing to do? Let's look at what's going on with the PMO as it hit that overhead resistance. It started topping. Even if you got caught, that would have been a bad, that would be bad. And like I said, that's why you can get stuck and you can get stopped out too soon. because these patterns don't always come together. So that's why watching the PMO and what it does before that time is a good idea. So you can see there was some deceleration here already on the PMO. So something to consider. So that's how I would set my targets on a bull flag. All right, so let's go to a descending wedge. Trying to look mostly at the bullish patterns for you, but these work the same way if you're going to do a short. So descending, falling wedges, descending wedge, those are considered bullish patterns, and the expectation is a breakout to the upside, and the minimum upside target is going to be the length of the back of your wedge. Not everybody uses those to create targets, but it's something that you can do. A lot of people do it that way. I think Thomas Bulkowski also calculates upside targets that same way. So let's put some of these in here. All right, so this is where we would be watching that pattern and we'd get the bump to the upside. A nice big gap up on that. So that would be the trigger of that pattern. I'd then be looking for a move about the size of the back of this pattern. And that, let's see, yeah, about here. All right, so our upside target is, not quite, well, it's not that high. And if you were buying in on that breakout right here at that 124 level, it's not too long before you get to that upside target. But you keep that in mind. I mean, that's something to keep in mind. For me, if I saw this, where might I put my stop? Well, probably at the gap support over here. So looking at this, the upside target, looking at the risk, I likely would have just not gone into this because I like a better risk to reward. And you can just, there's ways to calculate it. You're going to see many, many ways to calculate it at ChartCon. So I'm not going to go into the risk reward that way. For me, you can just look visually and you should have an idea. So in this case, this is a pattern based on what we're seeing on Honeywell that we wouldn't want to trade. But that's how you would set your stops and that's how you would set your targets based on the chart pattern. And then you can start looking and see if that is a good thing or a bad thing. I would have probably, like I said, not traded it, but again, it ended up moving higher, but it kind of just consolidated sideways. It didn't turn out to be the best execution of a pattern. So keep that in mind. Every chart pattern doesn't need to be traded. Okay, let's look at the double bottom. I find these to be pretty accurate as well. A lot of these I've taken from back in time, just so that I could easily find them. Let's go ahead and go into annotation mode and look at what we would do with a double bottom formation. Okay, we're going to work off of this particular double bottom. It ended up fulfilling. We have the benefit of hindsight here, but I want to give you, again, the idea of where you might set your stops and where you might set your targets for these. So I'm going to, actually, there's so many going on here, so I'm just going to delete them all. All right, so there's our double bottom. And I'm going to set up our horizontal support and resistance lines here for the length of that pattern. And we know that our upside target for a double bottom should be about the length right here. So that is going to bring us up to, and I'm doing this visually, right about there. And that's the length of that pattern. Now, with all chart patterns, they're not actually the chart pattern until they execute. So you do need to watch them and look for the execution on them. Now, in this case, we did get a breakout, a slight one. I might have waited a little bit longer for that breakout to turn into something better. But let's see. So there's our upside target. That's a pretty long way. I wouldn't be looking at that as my complete target. Maybe on a longer term investment, sure, I can leave that up there. Now the question is, where is our stop if we want to go for a longer term hit here? I would be looking at previous lows back here as possible areas of support where you might set your stop. Okay, so when you're looking at this, okay, we've got a pretty good setup here for a target, and our risk is not quite so bad depending on where we decide to set that stop. We get the breakout and what's going on down here. We get a 20, 50-day positive crossover, so it's okay, let's keep this going. I would probably be marking here, like I said, for a reevaluation point. We would have hit that target. At that point, I could make my decision. Do I think this is going to ride out all the way to the top? Well, let's look at what's going on with the PMO. Hit that target right about here. PMO is looking great. It's putting distance between itself and its signal line. There's nothing here to tell me that I should be overly worried. So I would continue my play, but I might move my stop up now. I would probably tighten it because that's what I do when I reevaluate. I can see a level right over here. And again, I look for those support and resistance areas where we get some movement. So I would probably set my stop right about here based on the bottom over here. And you can see that was a support area when it backed off here on that pullback. I think that would be a fairly good place to set the stop. And now again, your risk to reward is still looking pretty good. You would not have ever been stopped out because you stay above that original target that you have, and you get the ride. Okay, so we hit up here at the target. That's when we start to reevaluate what's going on. Do we need to stay or should we go? All right, I would be looking at this, and what has immediately become obvious to me? Declining tops. Let's make that darker. Rising. That would clue me in that there might be some weakness that it is coming in. We had the sell signal. We did get the buy signal, but you can tell there wasn't a lot of action to accelerate and get higher. And then, like I said, it topped and we ended up with a negative divergence. So that would have been your cue to either get out or tighten that stop. And if you were going to tighten your stop, where might we look? I can see right here. That could be a good area to have my stop at. So I look for those horizontals, I look for those tops, and that's where I would start moving my stop, moving my targets, and keeping in line with my original target based on that chart pattern. So the chart pattern for me, I like to see these in candle glance. I like to be able to recognize the pattern and have the PMO setup. When you get a good PMO setup and you see a good chart pattern, there's a good chance we're going to see that execute. As you're writing it up and you have reevaluation periods, check your indicators. Of course, the PMO for me is my number one go-to. I usually include the OBV because I want to consider volume as well. I don't see the OBV, what it's doing here, because I didn't want to get that involved, but let's move along. So that was a double bottom. Let's see, let's find rectangles are, I think these are really great opportunities. The only issue is they can reverse or they can continue. But I like to look for these because it's very clear what your overhead resistance is. It's very clear what your support levels are. So what's happening as we're trading exactly sideways on this particular pattern with the PMO? Let's go annotate. All right. You can see what is happening here. We're going lower and the tops here are sideways. So this is telling me there's a negative divergence. So I wouldn't be looking for this pattern to move to the upside. I mean, you can see the PMO is putting more distance, more distance. This could alert me that this might be a shorting opportunity. It's like a lot of patterns, the length of the pattern becomes your target. So the length of this pattern, let's go ahead and put in. I'll just use the auto support resistance. I'll just do this visually. Interestingly, it does match up with a couple of pullback pullbacks here. So I thought that's interesting. All right, so we probably wouldn't have seen, we'd have seen this when we got the breakdown. And I'm going to show you what's going on with the PMO. And we'd be watching, we'd have that negative divergence. And there's that's when we get the breakdown. And so now our minimum downside target, length of the pattern. So now I have to set my stop and I have to set my target. Well, the target's already here. So where do we set the upside stop? This is actually, in this case, I would say this is subjective. A lot of this is subjective. That's part of the reason I like it, because while it's based on numbers, I still have the opportunity to, you know, be creative in what I'm seeing. So I see a top back here before that pullback. So that would be a possible stop. It's also about halfway through the pattern. So now I have that 2-to-1 risk reward ratio. So let's move it across. What might have happened? And sadly, we're going to pass through. All right, we're looking for those lows. And unfortunately here, we probably would have been stopped out. It happens. But we could continue to watch this pattern because we know that there's issues going on here already. And there's another opportunity to get in, really just the following day. This time around, we didn't quite get to our stop. And we could continue to ride it. We would hit our target down here. And now it's time to reevaluate. I would move my stop just above this original target. I could see levels here. I would tighten it up because I've made my profit on that short sell. All right, let's continue through. Symmetrical triangles. These are typically a continuation pattern, but they can break in either direction. So for me, when I see symmetrical triangles, that is definitely a cue, excuse me, to start looking at the PMO and seeing what's going on. So let's go ahead and move again into the annotate mode. We see the pattern develop. Let's see where we should expect. What should we expect to happen based on the PMO during this period of time? All right, from here to here. So we're going to go. We're seeing declining tops. We're seeing declining tops. So that's a bearish confirmation. If you want to go as far as if we're looking for rising bottoms, really don't see that in here. So we're definitely on the negative. We're below the zero line. I would not expect, looking at this kind of momentum, for a break to the upside. I would be looking for that break to the downside. All right, get to where we can see it. Okay, length of the pattern. There we go. So our downside, if we're going for that with that breakdown, got a big, huge breakdown below that symmetrical triangle, that would be your opportunity. All right. So now where are we going to set our targets? Well, the idea is, of course, it's the length, again, of the back end of the pattern. So that would put us, right, I keep going into those horizontals. Length of the pattern, about here. So this would be our minimum downside target for the pattern. We got the breakdown that clicked on that pattern. So where do I want to set my stop? I would probably set, I can see right here, even in the short term. I'll just pull this back and out of the way. You can see that we've got some lows up here, some intraday lows. I would probably be looking in that area for my stop. I don't want to get stopped out right away. So again, this is very subjective. You can go halfway through the pattern. That's a good way to automatically know you're going to get that 2-to-1 ratio, right? Because half of the length of that pattern and we're looking for the full length of the pattern as our downside target. So that's one way you could consider setting yourself up with just an easy 2-to-1 ratio there. So what would happen, we'd get that move to the downside. In this case, we would fortunately not be stopped out. Let's go ahead and look at here. All right, so we'll travel. Oh, okay, now we hit our target, time to reevaluate. All right, what's going on with the PMO? We're seeing the spread between it and its signal line getting larger. We can see that it's traveling lower. We've got a lower low already than the previous low. Nothing's looking very good here. So it's time to determine your new target and move on there. So let's go ahead and look at that. All right, I would be going another length of what the pattern would be as my target. We don't have a pattern here. It's time to, like I said, reevaluate. So I would give myself the length of what our previous one was as my target. And there we go, about that 3 clicks here. And what would be the stopping point? Like I said, I don't see anything obvious here. So I would look at, like I said, maybe halfway through, bring it in a little bit if I wanted to, lower my risk somewhat as my possible stop. Again, kind of this is subjective, and a lot of this will be, but like I said, easy rule of thumb, you can just go halfway through the pattern to set your stop and use it that way. So in this case, I think I would set my stop just about here, again, based on the length of space and distance to what my target is. And so we would continue to travel, and we would hit our target here. Now what's going on? All right, I'm seeing some deceleration. I'm seeing the margin thinning. There we go. All right, I could go on, and we could look at all of these various patterns. I would love to go through them, but we only have a short time. I think what I'll probably do is put together a workshop that I will put on YouTube separately, and we can go a full hour and we can really get into this. But the takeaways, let's go ahead and show that summary slide. All right. So the takeaways I would have for you, these were many of the patterns we were looking at. My takeaways for you, again, is you remember all of these, the targets you can set by the length of the pattern. Head and shoulders are a lot easier to figure out those patterns, where your upside and downside targets are. And generally, you're going to have some really good setups as far as setting your stops and your targets. Targets are easy on the head and shoulders. But like I said, if you really need some help, if there's not obvious support or resistance previously in history, you can't go wrong with setting your stop halfway through that pattern. So that way you're setting up that 2-to-1 ratio. So that would be how I would trade my chart patterns. The other thing is, like I said, looking for the best setups. So have fun, go out there and check out these patterns. And I do have a great reference for you. And I'm going to just go back very quickly. Thomas Bulkowski is the man when it comes to chart patterns. And if you go to the pattern site, you will see all of his books and his targets. But this was the interesting thing: which patterns have the best likelihood? High and tight flags. So the flags we were looking at, where you have a very clear one, you don't have this dragging out of a flagpole and a dragging out of a flag. No, it's the high and tights. Those are the most successful patterns.
Here's how to put a simple line on your chart without using the annotation tool. Let's say we want a line in here at 47.50. You can just drop down here into the overlays, pick horizontal line, add the price point, 47.5, and we're going to use a red line. We're going to make it solid and thick and hit update. and that blasts it into the middle of your chart.